If you clicked on this video and you don't currently have a high interest savings account, then you better have one by the end of this video. Okay, on a serious note, whether you're looking to open up a high interest savings account for the first time, or you're looking to potentially switch to an account that's offering a higher interest rate right now, then this video is for you. Now, in general, savings accounts are pretty straightforward. You typically put money that you're saving for something specific in them, whether that's long-term savings, like an emergency fund, or short-term savings, like for an upcoming purchase that you know you'll be making. Now, traditional savings accounts don't really do anything for you. They literally just keep your money sitting there and waiting for you. Now, hopefully you're not paying fees or anything like that in order to use it, but you also aren't getting anything back. Also, even if you aren't paying any fees, money that you have sitting there for extended periods of time is actually losing value over that time. Just think about it for a sec. Prices are always going up, even if it's just by a little bit because of inflation. So any money that you aren't either spending or growing is actually losing its value over time. Now, the good news is that there are high interest savings accounts that actually pay you interest for the money that you keep with them as a little thank you for choosing them. Now, traditional savings accounts technically offer interest too, just in very low, very small amounts. I'm talking as low as 0.01%. That would be 50 cents for $5,000 saved for a year. Now, high interest savings accounts are just accounts that offer higher interest rates than that, and I'm talking as high as 100 times more. So high interest savings accounts are savings accounts that earn above average interest rates on deposits, so that your bank account balance can grow faster than it would with traditional savings accounts. Now, we do an updated version of this video every single year because interest rates are always changing. Actually, over the past 6 months, interest rates have started to come down and are very different than what they looked like at the beginning of last year, which is the last time we did this video. At that time, interest rates were actually pretty high, and a lot of people were really interested in seeing what the rates were and if they can get the best rate. Now, this is actually very timely because just this week, interest rates have been changing and coming down again. I literally got an email this morning as we were about to film this video for you guys saying that there was another decrease in some of the rates of the accounts that we use. Now, I'm going to talk a little bit more about why that is, but keep in mind that that's happening right now in real time. Now, interest rates coming down in value normally freaks people out, but what's important to know is that it's normal. In general, to keep it super high level, very simple here, when inflation rates go down, interest rates tend to come down too. Now, for the most part, that means that it's actually a good thing when interest rates are coming down because it means that prices are also getting lower. Now, when prices come down, it means that things are less expensive, which I think everyone thinks is a good thing, right? So even though our rates on the money that we have saved is lower, prices are also lower. I think that people just don't really combine the two in their head. They just hear that saving account rates are going down. Obviously, that feels like a negative thing because we want to be earning as much money as possible, but this is just how things work when prices are going down. Now, to look at the actual inflation rate figure, as of December 2024, which is the most recent data that we have at the time of filming this video, it's currently sitting at 1.8%, and that's a full 1.1% lower than it was at this time last year. Now, just because prices are lower and we're not being as incentivized to save with the interest rates right now, that doesn't mean that you should just be spending more money just because. If anything, we personally view these periods of time in the economy and what's going on with prices and interest rates as more of a reason to be incentivized to invest instead. In general, we only save our money for specific purposes. So it could be our emergency fund or very specific short-term savings goals that we're trying to hit. Otherwise, we're spending and investing our money. Now, with all of that being said, in this video, we're going to be covering what all of the traditional saving account interest rates look like right now so that you can see that and compare, because we're also going to be covering a bunch of different high interest saving account options and what they're offering right now in real time. So let's get into it.
All right, so let's start off with the big 5 banks and what their current interest rates are for their savings accounts. Now, these banks are also referred to as traditional banks, which ultimately means that they usually also come with traditional savings account interest rates, which, by the way, are really low because they aren't incentivized to raise them. The reality is that people are going to bank with them no matter what, either because they have been for years and don't want to switch it up, maybe they don't know their options, or maybe they just like only using one bank for everything, despite the fact that it's super beneficial and really easy to switch it up nowadays. Okay, so now what I'm gonna do is I'm gonna walk you through all the big 5 banks in Canada and show you all of the interest rates that they're currently offering. Okay, so before I jump into the individual banks, I do wanna kind of make a general statement about everything that we're gonna go over, because when it comes to the big 5 banks, you will notice when you're on their websites, they do have, a lot of them have multiple different high interest savings accounts, but the ones ones that we are going to focus on are the ones that ideally have some sort of offer or some sort of higher interest rate. Now, similar to last year, the first bank that I'm going to start off with is TD Bank. And what's kind of funny about me making that general statement about high interest rates is that the first account that we're going to look at is the TD Premium Savings Account. Now, the interest rate for that, believe it or not, is actually 0%. With that being said, though, they do have a current promotion right now where the base rate actually goes up to 1.05% if you have at least $10,000 plus in that account. Now, in general, speaking strictly from a savings perspective, I actually feel like $10,000 is a lot of money for that to be the benchmark that kind of kicks in you going from 0% to actually earning a little bit of interest on your money for the vast majority of people, I feel, but you know, that's neither here nor there. So this account is actually a $0. It has a $0 monthly fee. There's no minimum balance for the account. It is CDIC insured. There are no free e-transfers. If you are looking to e-transfer from this account, it'll be 50 cents for anything that's $100 or below, and $1 for everything that's $100 and above. So now next up, we have CIBC, and they have the CIBC E-Advantage Savings Account, and their base interest is actually 0.25%. So a little bit better than 0%, of course, but still pretty low. Now, they do have a current promotion that's going on right now that's 5% for 120 days if you're a new client, and the base rate also goes up to 0.4% if you have at least $10,000 within that account. So maybe for the big five banks, we're going to see that being a trend, this whole, threshold of $10,000, but I guess we'll see as we continue. For this account specifically, it has a $0 monthly fee. There's no minimum balance. It is CDIC insured, and same thing. No free e-transfers. For them, it's just one straight fee that they have. It's $1.50 per Interact e-transfer transaction. Now, if we take a look at Scotiabank, they have the Scotiabank Momentum Plus savings account. It has a base interest rate of 0.75%, and they actually have a current promotion right now of up to 5.25% for 90 days. Now, this account also has a $0 monthly fee, no minimum balance requirement. It is CDIC insured, and same situation, no free e-transfers. In their case, it's actually $2 for every e-transfer transaction that you want to send. Now, if we take a look at BMO next, BMO has the BMO Savings Amplifier account, and they have a base interest of 0.95. So I guess there's kind of a trend here. We are going up in terms of the base rate, but yeah, so for them, it's 0.95. That's their base rate, and they have a current promotion that's going on right now where you get 5% for 120 days. Now, this account also has a $0 monthly fee. There's no minimum balance requirements. It is also CDIC insured, and same situation, no free e-transfers, but in their case, we go back down. So they're actually charging $1 per Interact e-transfer. So finally, if we take a look at RBC, they have the RBC High Interest E-Savings account, and the base rate on this account is 1%, and they are also running a current promotion right now where you get 4.95% for 90 days. Now, once again, there shouldn't be a surprise here. The account also has a $0 monthly fee. There's no minimum balance requirements. It's CDIC insured, and there are no free e-transfers with this account. You do have to pay $1 per Interact e-transfer. So after taking a look at the numbers, what this tells us is that all of the base rates are somewhere between 0 to 1%, alongside these banks also offering a few current promotions. Now, what you do have to keep in mind is that these current promotions are subject to change at pretty much any time. Now, what you have to keep in mind is that there are so many other accounts out there that are offering much higher rates right now.
Okay, so now it's my turn to take you through some of the other non-Big Five bank high interest saving account options that are available right now. I'm specifically going to be covering the platform, what type of financial institution it is, what the current interest rate is, and also if they have any specific promotions going on, and then also the account features in general. Now, keep in mind that the first thing that you should be looking at when it comes to these accounts is if your money within the account is protected. Now, you've heard Dennis mention this when going through the Big Five banks, if it's CDIC protected or insured. I feel like it's a little bit more I don't know the word. People feel like the big five banks are safer. Really, all that is that's keeping your money in those big banks safe is CDIC insurance, which a lot of these other high interest savings account options have as well. So we're going to be talking about that more. Now, to be clear, CDIC stands for Canada Deposit Insurance Corporation, and they insure up to $100,000 per savings account per member financial institution. Now, like I said, the key is that you have to make sure that the actual high interest savings account that you're going with is a CDIC member institution. So you can see that on their website, and you can also look for this purple lock symbol or purple symbol in general and see if it's on the financial institution's website or potentially physical location if they have one. Now, keep in mind that CDIC specifically covers banks and federally regulated credit unions. So if you're going to look for an account with a provincially regulated credit union, they actually have a different organization that protects them that I'll talk about in a little bit. So make sure you keep that in mind. Now, on top of making sure your money's protected, the other main features you want to look for is if there's no monthly fee and no minimum balance required. So with all of that in mind, let's get into all of the different other options right now. Okay, guys, I brought out my laptop so I can actually walk you through all of these different accounts with the spreadsheet that we made. It's actually one of the comments we got a lot last year, is if there's somewhere that we could actually compile all of this information we're sharing into a spreadsheet for you guys. So that's what we did. We'll have it linked in the description box below if you do want to check it out as well. So I'm going to walk you through it and talk about all the different account options, starting with EQ Bank. Now, EQ Bank, you guys have heard us talk about on the channel many times before. We've been using their products for years now. I think last year we said 3 years, so I guess that would mean at least 4 years now. They're actually a digital banking platform, and their high interest savings account is the EQ Bank personal account. I do also want to mention that EQ Bank is powered by or associated with Equitable Bank, which is a large bank that's been around for many years now. So EQ Bank is their digital platform or digital side to that bank. Now, EQ Bank's interest rates are currently in the middle of changing. They're one of the ones that we got an email for just today based on the interest rates changing from the Bank of Canada. So their new interest rate as of right now currently is 1.5%. That's their base amount. They do have a current promotion. This is a promotion that they've had going on for a while. Just the actual rate offered has changed. Their current promotion rate is actually going up even though they brought the base rate down. So base rate 1.5%, current promotion is 4% if you direct deposit your pay. And I think they have different specifications of how that works. So we'll have some more information up on screen, but that is the promotion they have going on right now. Their account also has $0 monthly fee, no minimum balance requirement, it's CDIC insured, and they also have, keep in mind as well, it's a hybrid account, so that means that it's kind of like a checking and a savings account all in one. So even though in this case we're talking about high interest savings and really focusing on the interest you earn, you do also get an EQ Bank card and you can use it like a checking account as well. We actually have a link for EQ Bank as well if you're interested in signing up for their personal account, so we'll have that on screen and also in the description box below if you're interested. Now, for the next account, it's Wealthsimple. Wealthsimple, hopefully you guys have heard about them before. We've been using their investment platforms for years now. We've since also started using their cash account, which is the account that I'm about to mention. Now, Wealthsimple, also a digital platform. Their high interest savings account is their Wealthsimple cash account. Just like how I mentioned with EQ, it's similar from the perspective of it's supposed to be a hybrid account. You can use it for savings, for checking. You can open up multiple different accounts. So I have my emergency fund and other savings all in there too. Now, they also are just changing their interest rates as of today, the time we're filming this video. So what we believe is the new interest rate is a base of 2%, but they have a tiered system for their different cash account interest rates. So that's just for their core clients. That's if you have under $100,000 across all of your Wealthsimple accounts, not just within your savings account, but investment accounts as well, if you have those two with them. So the base would be 2% for core clients, goes up to 2.5% if you have $100,000 or more and across all of your Wealthsimple accounts, not just the cash account. And then it goes up to 3% if you have $500,000 or more. So a little bit higher there, but that's how their interest rate goes, 2%, 2.5, 3%. In general, they also have a promotion going on where you can earn an additional 0.5% above your base rate if you do eligible direct deposits. So you don't necessarily, let's say you're a core client, you don't have to have $100,000, you could hit these direct deposit amounts that they want and get an additional 0.5% that way too. Wealthsimple Cash also has a $0 monthly fee, no minimum balance requirement, it's CDIC insured. We'll have some of the information about how that works for Wealthsimple specifically on screen because it's a little bit different than the other ones, but it is insured in that way. Like I said before, also a hybrid account, checking and savings. I guess they would call it like a spend and save all in one. So they also have the Wealthsimple Cash card available that you could get with this account too. We also have a referral code or link for Wealthsimple Cash as well. So make sure you check that out on screen or in the description box below if you're interested and haven't opened up a Wealthsimple Cash account before too. That brings me into our next account, which is Simply Financial. Simply Financial is another one you've definitely heard us talk about before. We have our checking account with them specifically, and we do have a high interest savings account with them too. So it's also a digital platform. Simply Financial, if you didn't know, is associated with CIBC, one of the big 5 banks Dennis was talking about before. And their high interest savings account is just called the Simply High Interest Savings Account. I like a nice and simple name that's actually straightforward. They're currently offering a 0.3% interest rate. Now, typically, Simply doesn't have the highest base rates for their savings account specifically, but they do have some good promotions. Right now, it's 3.9% for 153 days if you're a new client. And then they also do have that bonus amount where just in general, base rate's 0.3%, but it goes up to 0.5% if you have $50,000 or more, which is kind of a high threshold, but that's what they're offering right now. Now, Simply's high interest savings account also has a $0 monthly fee, no minimum balance requirement. It's CDIC insured as well. We also have a link to sign up for Simply. That's also in our description box below or on screen if you're interested. We really do enjoy this platform as well. All right, so the next account is from Neo Financial, another digital platform. They have their Neo high interest savings account. They also have the Neo money account, but right now we're focusing on their high interest savings specifically. Their interest rate right now is 3%, no current promotions. It's nice and simple. 3% interest rate, no current promotion. I will be curious to see if theirs also comes down over the next few days or weeks too. So could even be different at the time that you're watching this video. So make sure you keep an eye out for that. But that's what it is right now. Who knows if it'll change. They also have $0 monthly fee, no minimum balance requirement, and it's CDIC insured. Now, the next account I want to talk about is Tangerine. Tangerine is another digital platform, and this one's associated with Scotiabank. Tangerine and Simply Financial are very similar in that way. Simply Financial associated with CIBC, Tangerine associated with Scotiabank. Now, their interest rate right now at Tangerine is 0.3%. They also have a current promotion, 4.5% for 153 days if you're a new client specifically. So lower base rate, good current promotion going on there. Tangerine saving account also has a $0 monthly fee, no minimum balance requirement. It's CDIC insured as well. All right, the next account we want to look at is Koho. Koho is another digital platform that you guys have probably heard about online before too. They have their Koho high interest savings account, another nicely titled one. Their interest rate currently right now is 2.5%, and their promotion is that could go up to 4% for paid accounts. So basically how Koho works is they have multiple tiers too, kind of like Wealthsimple Cash in a way, but you actually have to pay for the ones that are a higher tier. So the interest rate for the free account is 2.5%, and it could go up if you're paying this monthly fee. We're not typically a fan of paying a monthly fee, especially for a savings account when there's so many free options, but that's how their system works. And they do have that free one. Now, this account also has $0 monthly fee, no minimum balance requirement, and it's CDIC insured as well. Now, next up is Oaken Financial. This is another digital platform, but they're associated with Home Bank and then also powered by Home Trust Company. So kind of similar to those other ones we've talked about before, where they're powered by or associated with a larger bank. Their high interest savings account name is the Oaken Financial Savings Account. That's what they call it. Theirs also pretty simple. It's a 3% interest rate right now with no current promotions as the time of we're filming this video, at least that's what they're offering. They also have a $0 monthly fee, no minimum balance requirement, and it's CDIC insured as well. The next one on our list is Laurentian Bank. Now this one's the first one that's not a digital platform in a while. It is a traditional physical presence bank. They specifically have the Laurentian Bank high interest savings account. Their interest rate is 2.5% right now, and they do also have a promotion where that goes up to 3.5%, but only if you have between $100,000 and $5 million in the account. So if you have above $100,000, then the interest rate goes up, but 2.5% is also a pretty good interest rate right now, just at its base level. They also have $0 monthly fee, no minimum balance requirement, and it's CDIC insured. Something to note for them, because a lot of these accounts do have e-transfers available as well. They don't have free ones. It's $1 per Interact e-transfer. Next up is Motive Financial. They are another digital platform. They have their Motive Savvy Savings account. Appreciate the fun one. Motive Financial specifically is associated with Canadian Western Bank, so similar to some of the other ones we talked about before. Their base interest rate right now is 2.75%. They do also have a current promotion of 4.75% for 120 days. We'll make sure we put some of the information on screen of what the conditions might be to actually meet that promotion, but they have a very high rate available right now. They also have a $0 monthly fee, no minimum balance requirement, and they are also CDIC insured. Okay, next up is Alternabank, another digital platform, and fittingly, it's called the high interest e-savings account. Now, Alternabank is associated with Alterna Savings Credit Union. So this is a digital platform associated with a credit union. Their base interest rate right now is 1.45%, no current promotions, $0 monthly fee, no minimum balance requirement. They're CDIC insured as well. Because it is a federal credit union, I do want to point that out. We talked earlier about CDIC only actually providing protection for banks and federally regulated credit unions, not provincial ones. Alterna banks being associated with the Alterna Savings Credit Union is a federal credit union, so they do have CDIC insurance. Now, on that note, there's a few more platforms to mention. They actually are all associated with provincial credit unions, so things are a little bit different now, so just highlighting that before we get into them. The first one is Savin Financial, again, provincial credit union. It's called the Savin Financial High Interest Savings Account. Their base interest rate right now, at the time of filming this video, is 3.15%. Very high base rate, no current promotions, so very straightforward. They have $0 monthly fee and no minimum balance, but like I said, they aren't CDIC insured because they're a provincial credit union. Now, with that being said, they still are protected. It just works a little bit different for provincially regulated credit unions. Basically, every single province has their own regulatory body or a different organization that provides the protection. So for example, we're located in Ontario. We'll throw up what the logo is for their regulatory body. It's the FSRA, which is the Financial Services Regulatory Authority. And again, it's going to be different in every province. There's one for Quebec, Alberta, BC, all of the different ones. So you just have to make sure that it actually is protected and make sure you know what that body is for your province if you're looking for a provincially regulated credit union like this one. Now, next up is First Ontario Credit Union. This is another provincial credit union. Obviously, Ontario's in the name. In this case, it's the high interest e-savings account. Their base interest rate is 1.1% right now. They do have a promotion. It goes up to 1.15% if you have between $100,000 to $200,000 in the account. Just a little boost there if you have up to that amount of money. Another $0 monthly fee, no minimum balance requirement. Again, they're not CDIC insured because it's a provincial credit union. Instead, they are covered by the actual provincial one. In this case, it's Ontario, like I mentioned. So same as the Savin Financial one, it's the FSRA. Next up is the Meridian Credit Union, another provincial credit union. They have the Meridian High Interest Savings Account, very straightforward. Their interest rate is 1.05% right now with no current promotions. They have a $0 monthly fee, no minimum balance requirement, not CDIC insured, but again, they actually are insured on the provincial basis. So for example, in Ontario, it would be the FSRA, but you can look into what it would be for the other provinces. And last up is Desjardins, another credit union, another provincially regulated credit union, although they have it across Canada. In this case, it's the Desjardins Savings Account, currently offering a 1% base interest rate. They do have a current promotion of 4.5%. Currently, this is eligible until March 13th, 2025. Keep in mind that a lot of the promotions have some sort of end date, so keep that in mind based on when you're watching this video. They also have $0 monthly fee and no minimum balance requirement. Like I said, it's provincially regulated, so no CDIC insurance, but instead it's going to be through the different provincial ones. So if you're in Ontario, that's the FSRA. Okay, so that's it for all of these other high interest saving account options. I do want to touch on one more thing before I pass it back over to Dennis for some other important information. And that's that a question that we got last year was around if we have a high interest savings account or a TFSA for our savings account. In this video, and for what we personally do, we're talking about high interest savings accounts. We use our TFSAs to invest inside of. You can save money inside of them, and sometimes there's interest rates offered for that. But we, in general, personally like to invest inside of that and have a high interest savings account for our savings.
Now that you have a ton of high interest savings accounts to choose from, what I want to talk about now is something that we hear a lot whenever we talk about high interest accounts, which is the fact that the interest you earn is actually taxable. Okay, so here's how it works. You open up a savings account, you put money into the account, and then you earn interest based on the current interest rate that's being offered. So the money that you have in your account is growing month after month. Then when tax time comes around, you submit a form that's called a T5. It's actually called a T5 Statement of Investment Income. Now you typically get this form directly from the financial institution or a bank that you have your high interest savings account with. And what they do is they generate this. So what they'll do is they'll send it to you, or they'll make it available for you to download from your account. The slip itself will show interest from Canadian sources that you would have received over the last tax year. So if you earned, let's say, $500 in interest throughout the year from your high interest savings account, then you'll be taxed on that $500. Overall, it's a very simple process. Now, a lot of the time, people who aren't educated on how this process works tend to say things along the lines of, you're being taxed, so there's no point of using a high interest savings account. Well, the reality is, yes, you are being taxed, but at the end of the day, you're still earning more money than you would have had you not been using a high interest savings account. Think about it this way. If you have your money in an account that's earning 0% interest, then you're not getting any additional money. But if you have your money in an account that's earning a high interest that's taxable, you're still getting some additional money. The main reason for investing the majority of your money instead of saving it shouldn't be because high interest savings accounts are taxable. It should be because your money needs to be working even harder for you than the maximum amount of interest that you could earn with a savings account in general. So ideally, you'll only save money when you have a specific purpose for those savings. Like, for example, an emergency fund that needs to be readily accessible, or even short-term savings that, at some point in the near future, you're gonna need to have readily accessible for you. And so for that small amount of savings, or those two different scenarios that I just said, you ideally will use a high interest savings account to save more money than you otherwise would. Then you'll invest that other money that you have so that those funds can grow and outpace inflation over time. Okay, so we really hope that you guys found this overview helpful. And again, if you want to sign up for EQ Bank, Wealthsimple, or Simply Financial's high interest savings account, make sure you check out our links down in the description box below. Now, we've also made the spreadsheet available too. So if you want to check it out, make sure you go down in the description box below. There should be a link in there as well. And we'll see you next week with another video.